You have learned what crypto is, you have bought your first USDT on Bybit, you can read the chart, candlestick, support, resistance trends. You understand risk management, stop losses, position sizing, risks to reward. You have done everything right, but there is still one question nobody has answered for you clearly. What is my actual strategy? What exactly do I look for before entering the trade? When do I buy? When do I sell? How do I know when a setup is real and when it is not? Today I answer all of that. In this video, I'm going to give you one complete simple trading strategy, but specifically for Nigerian beginners that combine everything you have learned in this series into a clear step-by-step system you can apply to your very first trade. Not 10 strategy, not complicated indicator. One strategy, simple, repeatable, honest. Let us build this together.
Before I show you the strategy, I want to address something importantly today. Why crypto traders, why beginners search for trading strategy online, but usually find extremely complicated system. Dozens of indicators covering the entire chart. Complex entry rules, multiple conditions that all need to align perfectly before trading. These complex strategies look impressive. They feel scientific. They seem like they must work better because they are more sophisticated. But they almost never do. Here is what professional traders consistently discover after years of experience. The simple strategy executed with discipline outperform complex strategy executed inconsistently. Every time, the reason is psychological. A complex strategy with 10 conditions creates 10 opportunities for doubts. 10 moments where you second guess yourself, 10 reasons to exit or overrate your plan. Okay, this strategy I'm going to show you today has 3 conditions. These 3 things that must all be before you consider entry there. In all the 3 are present, you consider the trade. If anyone is missing, you wait. That is the entire decision framework. Now, let me by this. This strategy is called the support band strategy. Firstly, it is based entirely on concepts you already understand from video 3 and video 4, which is trends, support levels, candlesticks, signal, and risk management. Well, here are the 3 conditions. Condition 1 is that the markets must be in a clear uptrend, higher highs and higher lows on the daily charts. If the market is in a downtrend or moving sideways, we do not trade this strategy, we wait. Condition 2 is that the price must pull back to a key support level, not just any support level, a strong, clearly defined support level that has been respected at least 2 times previously. Condition 3 is that there must be a bullish confirmation candle at the support level, a specific candlestick signal showing that the buyers are stepping in at the support level. But without confirmation, we do not enter. The confirmation is our evidence that the bounce is actually happening. Uptrend check, price at support check, bullish confirmation candle check, then and only then do we consider entry. Let me show you each condition in details in Richard. Let's go to trading view. Now we are on trading view. This is Bitcoin USDT with 4-hour time frame. Now let me show you the condition 1, which is identify a clear uptrend. Now let's start from this place. If you see what happened let me bring the trend line so that this tutorial. If you see what happened from this place, the market went up. From this place, the market went up massively. Nice. So that is a clear example of uptrend. When you are seeing something like this, it's a clear example of uptrend that when it comes down, you buy and wait for it to go up and sell. And when it's already crossed this trend line, that means the trend has been broken. Now, what happened when it's crossed the trend line? You see that it's come down. But let's go on. You will learn this. You already learned this in video 3, which is higher highs and higher lows. But look at this Bitcoin chart. I'm going to identify. This is the swing lows, and then this is the swing highs. This is the previous low. This is the previous high at this moment. A swing high, which this place we are seeing is just a peak point where the price rose and then started falling. But a swing lows, this place is a toe at a point where the price fell and then started rising back. You see what happened after this place? The price went up massively. Now, look at this mark point. This place, let me bring the horizontal line to the point. Let's use this place as swing high. Let's use this place as swingers. Now, in each swings higher than the previous swing higher, firstly you have to ask yourself, is this place is higher than the previous higher? Now, in each swing low higher than the previous swing low, that is yes. The confirmed we are in an uptrend condition, one is satisfied. If these charts show lower highs and lower lows, we would stop here, which is what is going happening here. It's going down, going up little and coming down. It is lower high and lower low. We have to stop the price at this moment. This is the discipline. The strategy only works in an uptrend. Using a downtrend is how beginners lose money trying to catch falling price. Beginners always lose money at this point. They believe that any market that is coming down, it will be coming down. It will come down. That means it's already cheap. They have access to buy the market. Meanwhile, the market that is coming down has already felt the momentum. It can be coming down and still coming down massively to the extent that you will lose a whole capital. Now, let's go on the condition two. The condition two I want you to understand is the price must pull back to a key support level after identifying an uptrend. The price never just goes straight up forever. It moves then pull back. Now, you can see what's happened here. What happened here? This is the previous low. Now, let me explain what I mean by here. So, if you miss this place and you see this place, what happened in this place already? You see price have already touched this place. And what happened here again after this place? Price touched this place, which means price always touch support level one times, two times, or three times. So let me give you another support level so that you will know. Look at what happened here too. Come three. Even at this point, the price touch here, which is multiple times. This is the confirmations of support level. The pullback is where traders enter, not when the price is already flying upward and everyone is excited. After the pullback, when the price return to a level or a value. Now look at this chart as the recent upward moved. Which is this place. Okay, let me show this place. The price has pulled back from this place, it's pulled back to this place. And after the recent upward, where has it pulled back to? From here, it's pulled back to here, it's come down again, pull up. Now, this level here that I am doing the horizontal level has been tested twice or previously. So this mark is a strong significant support level at this point. It has tested one, two. If we still go, if we still see, yes, you see three, multiple times. That is already a clear and a strong support level. Now, right now, the price is approaching the support level again. You see, it's already approached it. Let's bring it here. The price has already approached the support level here, which means the price is still respect this place, because when it's come to this place, it still form a bullish candle, which means the price must still even bounce up from this place to up again. Now we have condition one, which is confirmation. We still need condition two and condition three, which is the bullish confirmation candle. Just this one is just small body. We still need another one to confirm the entry. So, but one thing is that without confirmation, we are just guessing. That's the price we pass. With confirmation, we have actually have evidence that buyer are already stepping. This confirmation is what separates a disciplined trader from an emotional gamble trader. Now, let's go on condition three, which is the bullish confirmation candle. The bullish confirmation candle. Now, let's use this place. Let me bring the demonstration so that this bullish confirmation candle, you see what happened after this green, you see this bullish confirmation candle. This tells you that buyers are actually stepping in the market at that moment at the support level, and this place is your evidence before you commit your money. There are three specific candle formation that can't ask valid confirmation for this strategy. Now I'm going to show you each one on this chart. Let me candle on the actual Bitcoin chart. Look at this area. Look at this area. The price previously bounced from our support level. You see this place, the price bounce up from this place to up. So right here, can you see it? This candle has a long wick touching the support level with a green body closing above support level. You see, the green is closed at the support level. This is what the confirmation signals always look like. This was the moment the strategy will have said entry condition all met, consider the trade, which is uptrend confirmation. And when you see this one is already up, you have to wait for the pullback as I said earlier, which is the second pullback. And after this pullback, what happened? The price went up massively. This is the strategy I'm talking about. That means the uptrend is confirmed. Price support, price at support is equal to confirmed, and bullish confirmation too is confirmed. We have three strategy here that we confirm, which is the support level touch here and its move up. First confirmation. The second one is bullish candle. That is the second confirmation. And the third one is price at already at support and it went up. That is three confirmation that give us the best strategy for us to enter the trade at this moment and go up. Now, let me give you how to enter the trade. When all three days conditions are confirmed, here is exactly how you enter the trade. First thing is your entry points. You enter at the close of the confirmation candle, or if you are watching the markets in the return, at the open of the next candle after confirmation. If you are like a person that has, let me say, emotion in trading, you just always lose trading or you just always miss entry. But what thing you have to consider is that after the pullback, at the closure of the second candle of the pullback, no matter time frame you are using, which is 1 hour or 4 hour, at the closure of the second candles of your pullback, enter the trade at that moment. That is your entry point at this place. This one close, this little candle close after the support level. That means at this point you don't need to wait anything. You can enter the trade at that moment. And when you enter the trade, you just have to be patient because the trade will test your emotion. Not even one, not even two, not even three. Now, let me explain what stop loss placement means for you guys. How you can place your stop loss. Your stop loss goes below the support level, specifically below the low of the confirmation candle. This is where our confirmation candle is. If you want to set your support level, you have support level to be below the next support level, which is this place. This place is 69 plus, your support level is 68 or 67 plus. Your take profit placements. You have to look at the next significant resistance level above your entry. This is your initial take profit target, which is already this place. Just have to go back, look. Okay, let's set it to this place because this is our previous high here. This is our previous high before it's already broke it. This is almost like 71,000 in USDT Bitcoin. So this is how you can set your take profit. Your stop loss have to be the your next support level, while your take profits have to be your recent resistance level if you are going on long trade. Now let's check up our risk reward ratio before we enter the trade. Can you see the margin from here? If you look at the margin from 69,000 to 67,000, that shows almost 2,000 in loss. Look at the margin in profits from 69 to almost like 73,000 in USDT. That is almost 4,000 to 5,000 USDT. The risk reward ratio is already 1:3. That is about that. Now, one thing is that before you enter trading, once your trade is live, there are three important rules you have to already managing correctly. Rule one is do not move your stop loss. Now, let me cancel this thing and explain what I mean for you by that. Let's assume you already take position, your long position at this point. You already take your long position at this point, your stop loss here. So, first thing is that do not ever and ever move your stop loss further away from your entry. Let's assume this market come down to at this point. You are now the type of person that have emotion. You know the market have already broke your support level. This market at that moment is not valid. You don't need to be dragging your support level to be coming down, coming down. You are giving your loss the room. You are giving loss room. You have to leave your stop loss. If it hits your stop loss, go and back texting your trade. That means the entry is not valid at that moment. Because if price move against you and approach your stop loss, do not be tempted to move the stop loss. We want to give you trade for more room. Your stop loss was placed at a logical level based on your analysis. If the price reaches your analysis was wrong and the trade should be closed. Accept the small loss. Move on to the next setup. Moving stop losses is how small planned losses becomes large unexpected losses. Rule 2 I want to give you is consider training your stop loss. Now, what significantly in your own direction above the entry at this point, you take entry and the price is moving up. It's better for you to set your stop loss here that if the price touch here again, close my trade. And if the price move up massively to your take profit, so you are already fine. But if you are like a person that you are still have a confidence that this market will go up, you can still set your stop loss here, cancel the previous one you have already set another stop loss here. That means you are training your stop loss. You don't have to panic. If price touch your stop loss, it will close. That means you still make profit and the price close at support level or at stop loss level, which is your take profit level. The technique is called moving to break even, and it is the one of the most psychological powerful tools for beginners trader. It remove the fear from the trade completely. Rule number 3 I will give you is that once your take profit is set, let trade run now. Do not close the trade early because you are novice. Do not check the price every 5 minutes. You divine your exits before entry. Let this plan execute it. Don't be a fragile person that will be just checking the chart every time, every time. You set your stop loss, you set your entry, you set your take profit. Leave the market to execute one of it too. The most common beginner mistake in the trade management is cutting winner shots and closing profitable trade early out of fear. Before the take profit is reached, this destroy your risk to reward ratio over time. Set the trade, set your alert, walk away and let the plan work for the day. Now, let me give you the full strategy walkthrough. Now, let me now talk or walk you through a complete historical example of this strategy on this Bitcoin chart today. From identifying the setup to the complete trade management, I'm going to find a pack setup on this chart that meets all three conditions and walk you through exactly what the trade would have to look like. Now, look at this area of the chart level several weeks ago or several times ago, for several hours ago. Is the market, let me close this thing. And once you have to identify here, before you do anything, you have to ask yourself, is the market is an uptrend at this point on the chart? Looking at the swings looks and the swing highs leading up to this point, higher highs and higher lows, yes, uptrend confirmed. You see, higher highs, higher low, higher highs, higher low, higher highs. You have to ask yourself before you enter trade, is the market that I'm looking at, is it an uptrend or is it a downtrend? Is it a sideways or what is it? Is it a range? The second one is that, is it a key support level nearby? I'm drawing this, that is the reason why I draw this support level here. This is the area has been tested and respected wisely or previously times sef. Strong significant support level, that is condition 2 located. Step 3 is that the price pull back to that support level again. Look here, the price pull back from the present high and came down to test this support level. That is condition 2 you have already satisfied. The step 3 candle act support, which what I told you earlier here. You see, this is the bullish confirmation that is telling you to look at this candle right here. That means it has a clear lower wick touching the support level with a green candle. You see the little things we call a clear lower wick, it touches support level. That means the buyer have already stepped in. This is the exactly entry point I am marking it now. Now the stop loss is below of the confirmation candle, which is this piece, which is what I said earlier, and your take profit, which is the next resistance, and your risk reward ratio. Now, this thing already happened in down trade too, which is this down trade. You have to understand, is this market going up or going down? Which is going down. This is your resistance, and what happened here? The price come down massively, but this is the pullback telling you that this price touched the support level and resistance level again. It is still coming down. Now, this is the one example of the best strategy we are using. This strategy does not need to work every time. It needs to work consistently enough over many trades that the wins outweighs the losses. And when you manage every trade with the risk management system from video 4, the losses are always small and the wins always at the least double. Now, what to do when trade is no sector? One of the most important parts of trading strategy is to know when not to trade. Now, let me look for the strategy for you here. Market is going sideways. There is no entry at this point from here to here. There is no entry. Look at it, the market is moving sideways, sideways, sideways. There is no entry. Not until you wait for the market to break resistance or support, which the market did here. This is the support level right now. It break it. Well, when it break support level will touch the resistance. And what happened here? Broke the resistance at this point. The green candle broke it, which is resistance. When the red candle broke its support, but when the green candle broke it, it turned to resistance. And what happened when the green candle broke it? It went up massively. This is something that most beginner trade never learn. They feel like they must always be in trade, sitting on the sides, feeling like missing out, like they are not doing anything, like they are wasting time. This feeling is one of the most dangerous emotion in trade. You have to look at this section. This is what we call side movements. No clear uptrend, no clear downtrend. Just price bouncing back and fox between two levels without any direction. Most of your time as a trader using this strategy will be spent waiting, not trading at all, watching, studying, waiting for the clear sector. Traders who cannot sit on their hands and wait are traders who lose money in conditions where their strategy has no edge. Patience is not passive. Patience is a skill, and it is a skill that directly translates to profits without risk any money at all at all. Method one is backtesting. You have to go back through your historical Bitcoin chart as we are doing like this on Trading, mark your support level, mark your resistance level, and leave it. Do this for like almost like 20 historical sector. Calculate your stimulate win rates and risk ratio. This gives you confidence in the strategy. What you will do is just mark your support level here, mark your resistance level here, and leave it. After the second day or the next day, you can use do this on your phone trading view. After the second day or the next day or the third day, come, or even that day, look at your support level, look at your resistance, look at what happened. Is the market match or what you're drawing? If not, that means you have not understand what we mean by support level, you have not understand what we mean by resistance level, you have not understand anything. You have to understand it and do this again. You can even use paper trading, which is already on trading view. You can use this to build your paper trading futures. It will let you practice placing a trades with fake money in live market conditions. Know your edge, know where to place trade, and know everything about your strategy first before you enter trade. You have to know the clear direction, which is uptrend as we teach ourselves. You have to know clear direction, which is downtrend as we teach ourselves. First thing is that these are the common mistakes that always happen with this strategy. Let me address you the five most common mistakes which Nigerian beginners makes when they first start using this strategy. Mistake one is trading against the trend. This strategy is always works in an uptrend. Some beginners see a price at support during a downtrend and try to use the same strategy, thinking the price will pass, as we see here. Thinking the price will bank, which means the price can even go down massively, as I already tell you this one earlier. Mistake two is using weak support level. You still just only one support level which is already not confirmed or tested multiple times, like this place you said you want to use it. No, you have already missed. Not every support level is equal. A level that has only been tested once is significantly weaker than a level tested 3 or 4 times. Mistake three is enter before confirmation. Some beginners say the price approaching support and enter immediately before waiting for the confirmation candle. This is called anticipating the bounce, and it is dangerous because support level breaks all the time. Without the confirmation candle, you have no evidence that buyers are actually stepping. You have to wait for the candle to close, confirm the pattern, then enter. This is what I explained for you earlier today. Please don't forget all the strategy I'm giving you. You can write it down for the next time so that you will still need it along the way. You are just starting your crypto trading, you are just starting your trading, you have a lot to learn. You don't just watch the video once and understand it. You cannot understand it if you watch it once. You have to watch it multiple times and practice what you watch. So that is the example, or that is the real trading strategy you can give yourself, because that this skills is a good skills. That means you are making money with your own brain, with your own sense. You don't need office, you don't need anywhere, just you and your phone or your PC. Mistake four is taking trade with bad risk to reward. If the support level is right below a resistance level, the distance to take profit is very small. This creates a poor risk. You are trading here and your profit is here, you still want your stop loss here. That is a clear no strategy at all. This that is a trades with a bad risk to reward ratio. If you cannot get at least 1 to 2 risk on the trade, skip it. Wait for a better setup where the price has more room to run towards to take profit, building its resistance. Mistake 5 I will give you last is over trading. This strategy produce clear every day. Start lowering their standards, taking trades that almost met the condition but not quite. This is over trading, and it consistently produce losses because you are trading sector that do not even have the statistical edge that proper sector have. 2 or 4 high quality trades per month with proper risk management will outperform 20 low quality impulsive trade every single week. Okay, now let us bring this entire series together with a final summary as I always do. In video 1, you have already understand what crypto is, why Nigerian or why the traders use it, and the basics every beginners need. In video 2, you have already have a verified Bybit account with USDT ready. With video 3, you have already reached any chart, crypto, candlestick, support, resistance, and trend. In video 4, we have already explained for ourselves a complete risk management system. And in video 5 today, you have a complete simple trading strategy, the support band strategy, with 3 clear conditions in a written trading plan and a price method before using it. Now, this is more confirmed. This is one foundation that most Nigerian crypto traders ever built. Most people traders have ever built. Most people jump straight to trading without any of this, and most people lose money as a result. You are differently, you have done it properly. What comes next is practice the strategy using backtesting and paper trading for the next 2 or 4 weeks. Find at least 20 history setup. Paper trade at least 10 to 20 live setup. When your paper trading shows consistent results, start with real money at the smallest position size. Your risk management calculation produce. Keep your trading journal from day one, every day, every result, every lesson. Review your journal weekly and identify pattern, improve continuously. This is the part. It is not a shortcut, it is not a get rich quick scheme system. It is a genuine foundation for becoming a consistent profitable Nigerian crypto trader over time. Well, I will continue posting video going deeper on advanced topics, multiple time frame analysis, additional strategy, trading psychology, reading on chain data, and more. Subscribe to this channel so you do not miss any of them. If this entire series has already helped you, please share this video one with every Nigerian you know who is trying to learn crypto trading. Send it to them directly. Post it on your own WhatsApp group. Share it on your Facebook. You might be the reason someone build a proper foundation instead of losing their savings to an avoidable mistake. Thank you for being part of this community. See you next video. My name is Native Sodik. I love you. Thank you.